Alright, hello everyone, and welcome back to Daily Update, my 1000 Days Challenge. This is day 93, so let's get things started. Alright, so first and foremost, the US equity market, we do see some sort of rejection, which is potentially signs for retracement and stuff like that, but we are not actually seeing a follow through in terms of that, which is definitely a very first good sign when you do see a bottom that is forming in that sense. So bottom generally do still see some sort of rejection, but the fact is that rejection thereafter doesn't seem to be much stronger in terms of price reaction wise. So similarly, you see over here with the rejection, we got strong drop, bounce, and then drop, drop again. So same goes for here, rejection, drop. And then same goes for here, rejection, we do have a bounce, but then we still consolidate here. So what we do want to see when there's a strong downtrend is that we get rejection, we get push, rejection, we get a push. Now that is where we're very clear, distinct, strong bearish trend. On the other hand, if we do see the flip side or the opposite like this, if we do actually consolidate over here, we definitely do have a very strong potential for a break towards the upside. And that's the same case for Nasdaq, and also the same case in the S&P 500, where we do also have this downslope trend line. And this is the first, second, third, and then this is the fourth retest. This is actually the fifth retest itself. So generally, a downslope trend line doesn't last forever simply because of the fact that price will definitely hit towards zero if we do actually continue and maintain these trend lines as key resistance. So therefore, definitely this is definitely meant to be broken. But the question is when, especially if we do have an upswing in terms of market wise. So I do think that consolidating over here, the frequency of the test is also increasing. You can see that the distance between here and here, the retest is quite far. And even from here to here, the distance is also relatively far. And even from here to here is also quite far. But then thereafter, we have a very quick retest over here. And then now once again, we have a very quick retest, even though we are strongly pushed towards the downside. So those are very clear signs that we could have a potential shift back to a more bullish momentum in the midterm as well. All right, and then finally for China equity market, like what everybody understand, we definitely do lean towards a very clear bullish kind of momentum swing. But bear in mind, we still have a lot of resistances left to go, and we are forming somewhat like a five-wave kind of a leading first wave diagonal, in which case we have a very healthy retracement to even break the low over here, but not the lows over here itself, and it will still be a very healthy kind of retracement pattern, whereby we have A, B, C potentially form a double bottom over here. That will be a very bullish sign. In which case, if we do bounce up strongly and break above that, there'll be a really great third wave, whereby third wave could potentially hit this $34 or even this $36 region itself. And then if we do have some sort of retracement over here, and then we could potentially push for $40 or even the $43 mark very shortly in the next coming year in the 2023 itself. So that's definitely something that could be upcoming for this year in terms of the China equity market. And similarly, in terms of KREP wise, I do lean to some sort of retracement pattern over here. But bear in mind, as long as you do find this 200 simple moving average on the daily chart as support, I do lean that we will be much further upside for this year itself, potentially heading towards around the $50 target as the third wave, and even the $60 for the fifth wave extension itself. Yeah, but we have still a lot more time to go because there's still 11 more months to go. So let's see how things goes. And then finally for Bitcoin itself, so unlike the US market whereby we did see a red candlestick, Bitcoin actually remains relatively strong in the sense that we form a green candlestick. And volume-wise was also rather decent. But bear in mind that we haven't strongly break above this range, which is what we want to do between the 17.8K region itself and the low over here, which is the 15.6K region itself. I do think that consolidating here over long term and then breaking upside will be very clear consolidation and accumulation phase confirmation. And then there could perhaps be a very strong shift towards upside momentum. And in terms of the potential upside, I do definitely think that we do have a bull market in that sense. We're definitely very likely to see a six-digit mark. But that's not to say that it's impossible or definitely will guarantee that it will happen because everybody's up to the guess. But let's see how things goes. And with that said, I've come to the end of today. I don't see any potential trade setup if you're looking down 4-hour wise, simply because this looks a little bit extended. If you're looking in terms of retracement and pullback pattern wise, I would still prefer to be nearer over here for trade, nearer over here for trade, and nearer over here for trade. So over here itself, I would say that if you have entered a trade somewhere along here, and then you can enter a breakout over here itself, and I want to mention above the 17K mark, and then stop loss right below the swing low over here, and then you'll be trading towards that. So that could be a potential setup that you have already entered, and there will be a great move in that sense. And yeah, so you have a 1:2.5 is to reward if you close down, or you could just trail below it and see how things goes. But yeah, otherwise that's more or less about it. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye bye.